You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. All right, welcome back, everybody. Welcome to Omaha. We are here. I'm with Hamish. I'm with Tom. We got the full squad. We made it. I made it because remember last week on the podcast, I had my COVID scare.
Bombshell.
Yeah, bombshell. Luckily, I tested negative 3 times, and I got on the plane, and now we're here. We are all here. It's kind of surreal, actually.
It's crazy. I can't believe this. It's come up so quickly as well. It's unbelievable. It is very quiet in Omaha.
So quiet.
Yeah.
Too quiet.
It's suspiciously quiet. It's suspiciously quiet a lot of the time.
Yeah. I like it though.
It is. It's very chill, very laid back. Yeah.
Who was it? One of you guys said it feels as though they're like recording Stranger Things here.
Yeah.
Was that you?
Yeah.
You said that?
Yeah. It does. Gives
it
you
does
that vibe.
feel like that.
Yeah.
It's like got the old like yellow school buses and the old big trees and like no one's around. But
yeah,
I don't know. It's kind of cool. I like it.
Well, we went for a bit of a wander around LA because we had a 7-hour layover in LAX. That was intense. It was like everyone tooting at each other. Omaha is just a breath fresh air.
Yeah, it was quite a contrast actually. Going from LA, there was a fire going on. There's like people are running around. We couldn't even figure out how to get out of LAX for a while there.
Yeah.
And then we got to Omaha. It's just peace and quiet.
Yeah, so we got in yesterday, and we've just been bumming around today, really. Haven't we? The first things first. Thank you to what was his name? Phil.
Yes.
Phil, who first of all, he got us the tickets to the Berkshire meeting.
Yes.
So he dropped those off today. Thank you very much, Phil, because you're the real MVP.
Yes.
But this is the crazy thing, right? He comes in and he goes, I also got you guys a gift. And I was like, he doesn't know that we run YouTube channels or have a podcast. Like he just literally knows us as 3 dudes that are going to the Berkshire meeting. And he comes in, he gives us this gift, and it's these flipping bobbleheads.
How good.
I mean, if you're on the Spotify or Apple podcast version, you have to go to YouTube right now. We have a Warren Buffett and a Charlie Munger bobblehead. So I've got his Instagram or his store here, bobbletopia.com. So if you're interested in these Warren and Charlie bobbleheads, or you just want to go and support him because he supported us, then definitely bobbletopia.com. But that was pretty crazy. Like the moment when you guys opened the box and realized what these were, that was pretty amazing.
I didn't really know what to expect, like when he said he's got a gift for us, but then recognizing that he's a bobblehead. Yeah, you'll need this.
You're going to need this around these parts.
No, but what's the name of his store? Bobbletopia. So
Bobbletopia,
I mean, it makes sense that it would be bobbleheads. But they're cool. Good build quality.
Yeah, absolutely. Quite dense.
Sturdy.
Yeah, they're coming back in your bag because both of our bags are like bang on the limit.
On the border.
I was like thinking, we were talking earlier, we're like, who's going to take these bobbleheads back? And it's like, well, I guess Tom gets to keep them because he's the only one with space.
Yeah, they weigh about 5 kilos. So.
Yeah, they are quite heavy. But honestly, he could have given us a handgun because then later on, coming back to our accommodation in the Uber, it was pretty funny. We were just talking to this guy. It started because I looked out the window across the street and I was like, I was looking at these lawns heading up to these houses. Like, that looks quite nice over there. Nice trees, nice open, nice and quiet. What did the Uber driver say? He's like, no, that's the dodgiest.
Like, do not
walk over there. You will get shot. He literally said that. If you walk over there, you will get shot.
Yeah, that's wild. Yeah. What did he say? Where's the area I picked that we're staying in? Was it ghetto adjacent or something?
Yeah, that's how he described it. He was like, you guys, not so bad. Ghetto adjacent.
Yeah, that's what you get for putting me in charge of picking places to stay.
That's when you get the value investors to book Airbnbs. You're like, that's very cheap.
Yeah.
Let's do that one.
That is trading at a severe discount. Oh gosh.
Oh boy. No, but then he gave us this man, he kept coming through. He gave us some recommendations of things to go and see, and that's what we did today.
The
downtown.
Yeah.
So we went and saw the gallery, and we rode around on scooters, which was fun.
Scoot. That was good fun actually.
It was.
Yeah. Museum. How'd you guys rate the museum?
Yeah, very
Museum was
interesting.
solid. Yeah.
Solid.
I'm not a big art person personally. I don't have the historical background to kind of like, oh, this is from this, I don't really. Yeah.
Yeah, I barely remember what I did yesterday. So.
Yeah. I'm not big into art. But I tell you what, it was kind of interesting seeing like how this place used to be. And like some of the jackets and stuff or the pieces of furniture were from like 1750 or something crazy. So that was pretty cool.
Yeah.
We went past Warren Buffett's workplace.
We did.
We loitered a little bit, knocked on his window and pissed him off a little bit.
Yeah, we tried to get in from every entrance and I've failed.
Yeah, well, they've got a bit of like construction area sort of blocking the front entrance. I don't know if that's like actually legit or whether they're just making it look like for the Berkshire weekend so people can't come in.
They like knocked up some like little plywood kind of walkway or something. I was
they
like,
just pay a guy to look busy.
Exactly. Yeah, he just wears some high vis and just walks around a little bit.
Yeah.
Yes. But no, just said to use the back entrance. So we went through the back entrance, went up the stairs, knocked and no, we didn't do that.
Yeah.
But we were trying to think of ways that we could have, like with the FedEx, can we dress up as a FedEx delivery guy? Go like, I got a package for Mr. Buffett.
Yeah, or
anyway.
high-vis jacket on a ladder and we
Yeah,
could have got anywhere, I reckon.
Yeah, that seems to work. We went to Chipotle. We forgot about that.
Of course. In fact, can we splice in the video clip? Should we upload? Can we try and splice it in like maybe right now? Well, this is us. This is us experiencing Chipotle for the first time. So 3, 2, 1.
What's going on, guys?
Yeah, I don't know. A little underwhelming.
Just checking out the Chipotle.
I thought it'd be like, I thought they'd embrace it, like flashing lights, neon sign, colours everywhere, but it's just a bit of concrete, really, isn't it?
Yeah.
Should we go give them some ideas, maybe? Yeah. All right. Hopefully that was us. I don't know. That was weird.
Either we just looked ridiculous or that was edited perfectly.
Either or. But no, we went to Chipotle and how'd you guys rate the food? Did you like it?
Oh, great. Yeah, great food. I love Mexican food. Yeah, I don't know. I didn't know what to expect because in Australia, we have like Mad Mex and Guzman. It's like 2 of them.
Yep.
Definitely better than both of them. Yeah.
I liked it a lot.
Yeah, big fan.
Did you rate it?
Yeah, it was solid. Yeah. I haven't paid up for the guac. So
have to.
Oh, absolutely!
Fantastic.
You can't go Mex and not get guac.
Yeah.
It's just like it's like illegal or something.
Yeah.
But no, that was good. They had a Chipotle as well.
Little underwhelming, I'll be honest.
As the clip showed, it was a little underwhelming. It kind of I kind of don't want to say this. It kind of resembled a McDonald's drive-through.
I was thinking the same thing.
Oh, I really thought they'd do something
do you
different.
reckon McDonald's knows?
Yeah, I don't know. That could be awkward if they find
That could be a problem.
yeah.
Yeah, I don't know. So maybe we'll give them some tips. We'll see how we go with that. But definitely some improvements could be made to the Chipotlanes, I think. I'm thinking like neon strips along the ground, like fancy lights, confetti maybe. Confetti's a good one.
Yes,
But yeah, Chipotlane, little underwhelming, but we'll see what their Chipotlane growth was like in the quarter whenever their earnings come out. But yeah, anything else to say on Chipotlane? What else? We ate Chick-fil-A last night.
Yeah, we've been burning through fast food restaurants. We did In-N-Out was the first one.
Yeah, we did that in LA. Yeah. That was solid.
That was good.
How'd you rate the guy's service?
Oh, unbelievable.
Extremely enthusiastic.
Extremely enthusiastic. Oh my gosh. And then what about the guy that served it? Like we had one guy, as soon as we walked in the store, he gave us this big spiel and was over the top. But then when we ordered, the guy took our order and was like, 3 double doubles, 3 fries and 3 shakes. And then he kind of got half of our food. And then he just stood there with a blank face back at the counter like, oh my God, I hate my job. And then it was like 10 minutes later, we're like, I still haven't got those shakes. Anyway, went back up. Long story short, and he was like, "Oh Christ, sorry guys." But
the shakes were like very like if you ever get a thick shake in New Zealand or Australia.
Oh my gosh,
it's about triple the thickness of one of those.
Honestly, it was just ice cream.
Yeah.
It was just like it was like chocolate soft serve ice cream.
Yeah,
but maybe that's what a shake is over here. I don't know.
Yeah, I don't know.
But when I drink a milkshake or a shake, I expect it to be liquid.
You expect to be able to drink it through the straw that
through
they provide.
Yeah, that's true. That's the first thing.
The minimum standard.
You had the first go at it, and you were trying to suck it up through the straw, and you're
pass out, mate.
Your like eyeballs were popping, veins on the head. You're like trying so hard. Yeah, that did not work well. I ended up taking the straw and using it as a spoon for the whole thing. But
wait, so can anyone in America who goes to In-N-Out, is that a normal experience for someone to greet us at the door? Is that a normal thing, or was that just
something we need to verify?
Yeah, I need to know if that's a real thing, because that's impressive if that's a standard policy. What's impressive?
It was very clean. It was very. I don't know. It was a good outfit. I liked it quite a bit. It was very clean. It was like a retro kind of diner vibe, but I liked it. I thought it was good. It was good.
We saw a Top Golf. Didn't realize there was a Top Golf here. We'll have to check that out.
We're gonna have to go explore
right next to the Chipotle.
Yeah. Actually. So get your golf, get hungry, go. Chipotle. What else do you need?
Straight back around for another round of golf.
What more do you need?
Yep. So yeah, lots to do, and lots still to come.
Yeah. You actually also, Brandon, you haven't mentioned that you enlightened a taxi driver about PayWave.
Oh yeah, that was hilarious. Yeah, this old guy had given us this ride back, and I just got to the end of the trip, and it was like, oh, you just insert your card. Anyway, I wasn't really listening to him. I just go to tap like PayWave on the screen, and it was like, oh no, we don't, you can't do that. You have to insert. And then I had already done it, and I went boop. Accepted. And man, seriously, it's like this guy had, like, what did you say? It was like
he saw the face of God.
Like he did see the face of God.
Yeah. He looked at the machine and then just sat in his chair, just stared off into the distance for a good 30 seconds.
Like, oh my God. That's amazing.
He genuinely couldn't believe it, eh?
He genuinely
he was like knocking off, going home to tell his wife what happened.
Yeah, absolutely.
Have a big debrief.
You know what that guy spoke about at the dinner table that night?
Yeah.
That was absolutely amazing. But yeah, that's kind of what we've been up to so far. Anything else to add that I'm forgetting about so far? I mean, we just got here yesterday. So.
Yeah, we did a bit of lime scootering.
Yes.
Lime scootering.
Checked out the convention centre where they're having the meeting.
Yep. Scouted out the entrances. Yep.
So they didn't let us in.
No, they did not let us in. Nope. No, but that's okay. We're a day early. We'll just say, no, we're just getting in line. Pitch the tent.
2 days early.
Yeah. Well, I imagine it might get a little bit like that for some people having to line up. Yeah. But we don't have to, like, that's to get the passes, right? Some of the people lining up.
Well, sorry.
Is that just for entry?
Well, first of all, I don't know about tomorrow, but for Saturday, for the main event, there's only about 18,000 seats in the arena, I think. And there was 40, 50,000 who typically go. And it's been a couple of years since we've had one, or Omaha's had one. So you'd expect there'd be a lot of people going. So, you have to line up for the Saturday.
It's just first in, first served.
Getting seats. Yeah,
right,
yeah.
okay.
So tomorrow, though, I don't know, like, what it will be like. Because we're just trying to get into the convention center tomorrow. So there's no kind of like, there'll still be a lot of people there, I guess. So,
but yeah, you're not going to have to scramble to get a seat.
No, I don't think so. Yeah.
Oh, I guess we'll see.
We'll find out.
What time does it start? Do we know?
I don't know. Midday?
We got so much to do before then. Yeah, we should probably get cracking because we will have to end this podcast whenever we have to end it because we are going to go to a barbecue.
Yeah.
Yes.
Tom, you got us into that.
Yeah, it sounds reasonably popular. Like last week we were talking, it was just going to be us and Matt Peterson, right?
Yeah.
But there's a few people that
Matt
messaged.
Peterson's fun?
Peterson Capital Management.
Right, okay.
Yeah, so he's based in Austin, Texas.
Okay.
He's got a pretty good track record. I think he's been running the fund 10 years now and been doing 19% a year, something like that.
Wow.
It's pretty impressive.
Yeah, pretty concentrated. I think he's got 8 stocks, something like that. So, yeah.
Buffett style.
Yeah, for sure. Yeah. So that'll be cool. I think there's, must have been following the podcast we did last week as a bit of a Omaha preview. Had a few people reach out and say, hey, I'm going to that too. So.
Oh really?
Wow.
Yeah.
Oh, nice.
Fantastic.
Cool. So I'll meet up with a few of those people.
No, it sounds like there's going to be quite a few people going to this barbecue now. But yeah, it was like, is it just going to be us and Matt? But anyway. Yeah. And then, what day's your dinner with Guy Spear? Your fireside chat.
Fireside chat. Well, that's must be tomorrow. Is tomorrow Friday?
Yeah, tomorrow. Yeah.
I don't know. We sort of time traveled coming over
we
here.
Have. That's the one thing. We've actually done quite well. We're not too jet lagged. I'm feeling pretty good.
Yeah.
I don't know if that's because we're just like buzzing on a podcast. As soon as this is over before the barbecue, but we'll see. But I'm not feeling too bad. You guys feeling all right?
Feeling good.
Yeah, I'm feeling okay. A little bit tired, just
Yeah.
even throughout the day. I think just a bit like hazy, you know, like something. What did you say before when we were out? Something just feels a little bit off. Kind of like that. So I'm sure that'll kind of ease off over the next couple of days. But we did a good job, like sleeping on the plane and kind of fixing that.
We did as best we could, I think.
Yeah.
Like as well as we could have hoped we would do in terms of sleeping, changing the sleep cycle and whatnot. Yep. Smashing Valium on the plane. No, we didn't do that. But anyway, should we get into some actual investing topics before what time do we have to stop this podcast, do you think?
15, 20 minutes. What do you think?
From now?
That? Yeah, 20. I don't know. What
We
do you think?
We got more than that? We got time. We don't have to be at this barbecue for an hour and 3 minutes.
An hour and 3 minutes.
Yep.
Okay.
Okay.
And I'm guessing it's like 10 minutes away, 15 minutes away.
Well, everything's 10, 15 minutes away, isn't it?
Yeah.
Okay.
I don't know if
Omaha.
you guys want some time to put on a suit or anything.
No. I definitely.
I'm chucking jandals on and getting out the door.
No. Okay. Well. All right. We should have enough
We've got
time.
Yeah.
You want to start with Musk? He finally closed the deal. So we don't have to spend too much time on this because we've spoken about it the last 2 weeks. We spoke about it last week with you as well, didn't we? Musk and Twitter. But he finally got the deal done. So Elon Musk bought Twitter. He got it done for $44 billion in the end. CNBC said the world's richest person secured a deal on Monday, agreeing to buy the social network for $54.20 a share, valuing the firm at $44 billion. Musk has said that part of the reason he wanted to acquire Twitter is because, in his view, the changes that needed to be made to the platform can only be done if it's a private company. It's a sentiment that Musk shares with Twitter co-founder and ex-CEO Jack Dorsey, who tweeted on Monday that the company, quote, has been owned by Wall Street and the ad model. Dorsey said that going private, quote, is the correct first step. Though Twitter's board unanimously approved the sale, the deal will still need to be approved by the shareholders, and it's also subject to regulatory review. CEO Parag Agrawal said he expects the deal to close in the next 3 to 6 months. And interestingly, if you don't know what's going to happen and you're a shareholder, it says if they accept Musk's buyout offer, they'll be able to sell their shares for $54.20 each. Shareholders can also hold onto them until the day the company goes private, at which they will be cashed out at the current trading price. So There you go. That's what's going down. Thoughts, opinions? Finally happened. Were you expecting it to happen, or were you skeptical?
I was pretty skeptical. I don't know. Musk has this kind of way of just saying a lot about certain things, and I just thought maybe that it would ultimately fall through, especially with the poison pill kind of activity or strategy from the management team. I thought maybe that would kind of deter Musk, but I'm pretty surprised, honestly. Well, I don't know what's going to happen with the management team. Is Parag going to be getting the flick? I don't know.
I think Elon Musk said that the board's payments, he said at least the board's payments are going to zero. So I don't know.
Right. So
they're going to stick around. It seems like he's going to try and make a culture of, we only want you if you genuinely want to be a part of this.
Yeah.
Like no money involved kind of thing. So I don't know. We'll see. What do you think?
I think it's probably going to be very good for Twitter, the platform.
It
seems like, I think before the deal even went through, Elon's putting up tweets like, hey, you guys want an edit button?
yeah, exactly. He hasn't even bought it yet. He already acts like he owns it.
Yeah, I know. But it's kind of surprising it went through to me as well. It's I feel like Elon kind of might just wake up in the morning sometimes with a bright idea, and maybe one of them was to try and buy Twitter, but it worked.
What's the reason why you're surprised it went through? Just because you wouldn't have thought that Elon would have followed through, or would have been stopped along the way at some point?
I think Elon following through probably,
right.
But $44 billion is a lot of money. But he got across the line.
I think it's 1/6 of his net worth.
Yeah,
which is crazy that it's only 1/6.
Yeah,
$44 billion, but it's still a lot.
It sounds like he's getting a margin loan to do it.
Really?
Is that right?
I'd have to check.
I don't think he's sold a huge block of Tesla to do it or anything.
Yeah, I did read about that.
Yeah.
That he's got a margin, and if Tesla I can't remember. It was if it halved, if Tesla's stock halved, then he might get a margin call or something. So
that could be interesting.
It could be interesting.
Yeah.
Uh-oh. Yeah.
But watch this space.
I thought what you said about how Musk is probably, or I don't know if he's probably going to do this or is interested in doing, is charging people to verify and then ultimately using that as an avenue to verify as many real people as possible so that you have this system where it's not just this small number of people who are verified. It's basically anyone who wants to pay for it, and any unverified accounts you would kind of dismiss as maybe being a bot or a duplicate account or something like that.
I would honestly love that. I would love for there to be no hiding behind a fake name or a fake account. Nothing.
Well, you should be able to, but like there should be a distinction clearly between.
Like this is a real person.
Yeah, you've been verified as a human, a real person.
I would like it to go further. I would really like, and maybe there's a strong argument.
We still
against
need the meme accounts though.
Meme accounts, that's true.
Yeah, I hope they don't like start removing other accounts through this avenue, but there should be a way to determine whether something is like a secret hidden account or maybe a bot or whatever it is.
Or if it's like an official page or something.
Yeah.
But I mean, the way I see it is like if everybody there was commenting or posting under their own name, then I feel like
different.
Twitter would be way different. There'd be so much less hate because like I wouldn't even throw I don't use Twitter anyway. I don't post on Twitter. But if I was just someone that got super cranky at something, I wouldn't throw any shade in someone's direction if it was like Brandon Vanderkolk has commented on your post. I would
it becomes Facebook.
That's true, I guess.
That's actually true.
Yeah.
And true, I guess some people don't hold back on Facebook, so maybe that argument gets thrown out the window.
But they hold back on like some person they went to school with. If they put up something dumb, you're probably not going to comment on it.
Yeah.
But on some media page, like people don't hold back.
That's true. That's true.
But I think it's a really smart revenue model as well, because there are a lot of people who might be in a position where they want to be verified. Like take us, for example, like we want to be verified, or maybe we have a podcast that we want to be verified. Yep. But maybe it's just not large enough that you can just go through the normal avenue at the moment. And I know people running businesses like we do, like even me on YouTube. I don't know are you verified? Do you even have verification on YouTube?
Nah. Okay. Actually on YouTube. Yeah. Sorry. I'm verified on YouTube.
Yeah. So I'm not verified on YouTube. Just take that for example. I would pay quite a significant yearly, I think, just to have it.
Would you? Well, I happen to know someone that can get you verified.
Well, in that case,
we'll talk about that later.
No, but because of the bots in the comments, just having a verification tick on your account, whatever your main account is, or all of your social accounts. Take Instagram. My Instagram has been deleted once. It was disabled again yesterday. Like I've had so much problem with Instagram because it's a small account, and it wasn't even that big when it got deleted, but it was a couple thousand that I won't get back immediately.
Yeah.
So just things like that. I think there's a lot of people in those positions who will pay a significant yearly, not even just a once off to verify. I think a yearly to be verified. So I think it's an interesting idea of a revenue model.
Yeah.
Yeah.
Anything to go on for Twitter? Anything else we want to say? Or I think we've spoken a lot about this. We're kind of going over stuff we've already spoken about.
We spoke about it last week, right?
But yeah, there you go. It's finally done. I wasn't sure about the timeline, but obviously they said here that it'll close in the next 3 to 6 months. Is that like normal for acquisitions? Like it takes them 3 months or so to get it right? Or I feel like most of them happen a bit sooner. I don't know.
Yeah, I think they normally take quite a while. Right. I mean, the Warner and Discovery merger has been going on for ages, and that just is, I think it's, even in the latest financials, they weren't merged yet, even though the name of Discovery is now Warner Bros. Discovery. They hadn't actually merged the financials yet. I think it's going to start next quarter. They've been talking about that for well over a year. So, yeah, I
suppose it's just like a lot of legal stuff. Cross the T's, dot the I's.
Yeah.
And I guess the bigger the company, the more stuff there is to kind of comb through, I would imagine. I don't know.
Yeah, I think the only time they really go through quicker is when like Buffett buys something.
Right.
And he's just like, we don't need an audit. That's all right. I'll send you the cash tomorrow, mate.
Yeah. What was it he bought? What were we talking about?
He bought Allegheny.
Yeah.
And just in the SEC filing, it was just like, went and had a casual dinner with, I don't know, some guy at Allegheny.
CEO.
Yeah.
That's crazy.
He's like, here's the price.
Yeah. He's like, it seemed legit to me.
Yeah.
I'll just transfer the money.
Yeah. I think they then came here to Omaha actually, and he's like, no, that's still the price.
Oh, really? Yeah. Well, I appreciate the visit, but haven't changed.
Yeah.
that's great.
All right, there you go. Elon Musk has bought Twitter. We'll see if it goes through. Should do. What do we want to talk about?
Meta reported earnings today. We're talking about this as well. We get to watch the stock market during the day.
Yeah, it's bonkers. It's like going up and down as we speak.
Yeah, it's not quite the full day. What are we? We're in Central Time.
Yeah.
So we're not on Eastern Time in New York
It's like
time.
early morning, isn't it? To like just past lunchtime.
You know,
Yeah.
I do occasionally get the question, like, why is there this little hub of value investors down under? Maybe it's because that we can't be traders. We're all sleeping.
Maybe.
That's actually an
a good
excellent
point.
Yeah, we can't make like rash decisions.
Yeah.
Like if a stock fell like a significantly halfway through the trading session, we're sleeping soundly.
Yeah, you can't be
through that.
freaking out. being
Yeah,
like, what do I just sell it all?
That's actually a great
Yeah,
point.
I guess you can trade the ASX or NZX or something. But if you're like interested in tech companies or something, like
Yeah. Anyway, but Meta reported earnings today, and the stock has been up 18%.
Cha-ching.
Cha-ching! So they must have done something right. I think the headline as to what drove the stock up today was that they beat earnings per share expectations.
Right.
So EPS came in at $2.72 versus $2.56 expected.
Well, they did sandbag pretty hard, didn't they? In Q1, they said like, "Oh, we're basically not going to grow ever again, guys. Sorry."
Yeah. Well, that's exactly right. Even though they beat expectations quite significantly, it was a negative 18% in profit year over year. So, yeah, they definitely sandbagged with that last quarter. The revenue was a miss. Actually, came in at $27.9 billion, which was up 7% year over year. So even though earnings per share beat and it was quite well received, revenue was actually the first single digit increase since since Meta has been public. So small top line growth, and the negative earnings per share was mostly a result of a big increase in R&D expenditure, which is related to the metaverse. So
Right.
I guess even though earnings was down quite significantly, it was kind of very much expected. It wasn't some increase in some expense that they didn't see coming. It was, it's been the rhetoric that Zuckerberg has been talking about for a very long time. They're going to spend upward of $100 billion on the metaverse over the next decade. So,
they really are piling on money for the R&D. But I mean, I think they realize they're pretty vulnerable, to Apple, Google. I mean, they really have the power over the ads business, so they got to get into hardware. And if metaverse is going to be the next thing that everyone's talking about, they got to be the hardware people for the metaverse. Otherwise, they'll get left behind. I mean, that's all their problems right now, is that we're all on iPhones or on Android devices, Google Pixel or something. Yeah. And all of this app tracking is just going to slowly, it won't kill their ads business, but it will impair for a certain period of time to a certain extent.
Yeah.
I don't know what.
And I think it kind of felt like it wasn't going to be a significant issue because Android phones make up the dominant smartphones in the world, and Google is an advertising business. So it seemed like even though Apple might crack down on tracking, that Google won't. Recently, that's potentially kind of shifting, and Google is significantly less reliant on the kind of tracking that Facebook or Meta is. So things are kind of developing. It started with the iOS change, now potentially Android having some impact, but we won't really know. But it's certainly a factor that's driving, probably a big factor that's driving Zuckerberg's push into the metaverse so that they can control the hardware, as you said.
What were the user numbers like? Because was it last quarter was the first decline?
Yes.
Wasn't it?
I believe so.
Or
was it a decline across the board, or was it just?
Or at least it was flat. I can't remember. I think it was a slight decline.
I think it was okay. I thought it was just a decline in the US segment, but maybe I might be wrong
that's the
on
case.
that.
Anyway,
but anyway, we can.
People were concerned that they're used to seeing daily active users going like this, and now it's going like this or like that.
Yeah, so users beat expectations. So we've got the classic, the four numbers. We've got the family, daily active people, which is kind of their family of apps used on a daily basis. That came in at 2.87 billion, which was an increase of it didn't come in at 8 billion. That would be kind of something.
8 billion. That's how many scam bots we got?
So that came in at an increase of 6% year over year. So still slowing down, but nevertheless still going up. On a monthly basis, the family of apps it was 3.64 billion, up 6% year over year, and that number continues to just get insanely high. 3.64 billion is a lot of people. And Facebook.com and Messenger specifically on a daily basis, 1.96 billion, an increase of 4% year over year, and monthly active users 2.94 billion, an increase of 3% year over year. So Facebook.com I think continues to get cannibalized, probably in part by TikTok, but also by Instagram, so its own platform. So growth is kind of slowing down in those places. I say cannibalized, but they're not, negative, at least this quarter. So, but yeah, in terms of the family of apps, if you include Instagram, which is kind of, I guess, probably one of their main focuses at the moment with Reels, Reels in Instagram, I'm not sure the breakdown, but I would imagine it's a big contributor to their overall advertising revenue. So seeing how that competes against TikTok, which has continued to become bigger and bigger. I think TikTok's over 1 billion monthly active users now, which is it's crazy how quickly TikTok is just.
Yeah, it's like the app, you start downloading in 2020 as a joke, and all of a sudden, completely addicted to it.
Well, what was it before? It was Musical.ly. No, was it Musical.ly before? So there was one that failed. What was the one that failed that I'm thinking of? Vine. So Vine failed. Well, Vine was owned by Twitter as well, by the way. They dropped the ball on that because Vine was basically the same thing as TikTok.
Yeah. That blows my mind.
Yeah.
I didn't know they were owned by Twitter.
Yeah, and it wasn't profitable. They couldn't really. It was pretty popular, I think, but they just couldn't. They just couldn't grow it
because that's literally what TikTok is.
It is what TikTok is. So then there was Musical.ly, which was like Vine, but it was just music. It was super cringe. Like it was, it was just people just making little songs and stuff, which I guess is a lot of TikTok today still. But I believe, Musical.ly turned into TikTok that we see today. But yeah, it is interesting that Twitter had that short form video kind of segment. They had the lead in that segment, and they just, I don't know, they dropped the ball.
Yeah. That would not have cost 44 billion if they'd recreated TikTok. I can tell you that for free.
No, definitely not.
What Twitter has done is they seem to have killed Clubhouse. We were talking about that the other night. Do you remember Clubhouse?
You don't hear many people. Is it still wasn't it like iOS only at one point? Is it still
iOS? It was iOS
now?
only, and it was like you had to have a friend that was on it.
Yeah.
And you could send some invites.
I mean, it's not the best kind of policy for rapid user expansion.
It was good for marketing, I think. That everyone was super excited. Yeah, even though it wasn't really that exclusive in the end, like everyone kind of could pass it on to somebody else. It felt exclusive in a way. You kind of had to know someone who was already in. But what happened with Twitter? What are they?
So Twitter's now got Spaces, which is essentially Clubhouse, but you're following people on Twitter, so you actually have people you might want to listen to.
You actually care about it.
Yeah.
I mean, this is the thing with all the social medias. It's just the network effect is better. Exactly. If you introduce the Clubhouse functionality on Twitter, then you'll use the Clubhouse functionality on Twitter because you've already got that network effect.
Yeah. It's immediately going to be better, almost in every case, unless you really drop the ball on
as long as it works the same.
Yeah, exactly. Yeah, we've seen it. So many times. We've got Snapchat with stories and disappearing messages, Reels, TikTok. This change with Clubhouse and Spaces. So there's probably more that I'm forgetting about as well.
Yeah. Twitter's still a bit sus on some of the execution, I'd say. Like, I don't think Spaces is on desktop yet. It's mobile only, I want to say. So there's a few things like that Elon, if you're watching, tidy that up, mate.
Tidy that up. But no, I like his priority to get rid of spam bots. Definitely do that first. Yeah. But what do you think about Facebook? Do you have any thought? Are you a Facebook shareholder? Do you have any thoughts on Facebook?
Yeah, never been a Facebook shareholder. It was on the watch list and I kind of just got to sort of a target price in like the depths of the 2020 crash.
Right.
And I just kind of missed it, to be perfectly honest.
Right,
so,
okay.
But it's got a lot harder to analyze, I'd say. There's a few things going on. Like there's the headline stuff is like the metaverse, and there's billions of dollars going towards that, which is a giant unknown.
Yeah.
But I think at a certain price, you can still buy Meta, and it makes sense, even with all that spend, and even if it turns out to be completely worthless, which
of course
is probably unlikely, but it's possible.
Yeah.
But yeah, the advertising tracking is a big one.
It is.
Adds a lot of uncertainty. So
Yep.
Yeah, I mean, I was just valuing Facebook entirely with Meta, not considered at all. Even taking out, they're gonna spend $100 billion on it over the next decade. Let's Zuckerberg have some fun, spend $100 billion, and then realize that they just don't win, and maybe Microsoft does better or whatever it is. So that's how I was valuing it. But then even the core advertising business for me has become relatively uncertain. I don't think it's unvaluable. I don't think it's that's just my opinion based on looking at the tracking changes and potential regulations that have just really haven't come in a substantial way, I wouldn't say, but every now and then you just hear the US is going to crack down on this, and this country in Europe is working to generate. I mean, there's just so many countries. This is even separate from the tracking, but there's so many countries Facebook operates in where they don't pay any tax, or the small. Australia is one of them, and countries are quite mad about it because they're such a massive company. The same thing applies for Google. And I don't know how countries like Australia will go about navigating that, or if they ever will, but that could be a big factor if countries try and crack down on that over time.
Yeah, it's been quite interesting. Like advertising as a business model seems to be extremely effective, but it tends to go through phases of disruption. We're in the museum looking at the richest guy in Nebraska back in the day, owning a newspaper monopoly.
Yeah.
That was sort of the back in the day way of advertising.
That's it. Yeah.
Phenomenal business, but then the internet became a thing.
Yeah.
He was probably long gone before that, I suspect, but that kind of hurt a few of Warren's investments, I think.
Yeah. Well, I think the story for advertising recently has just been, we've got this duopoly of Google and Facebook, and that's how it's going to be. And all this money is going to come over from legacy, and they're just going to scoop it up and run away with it. And I think maybe that story is changing a little bit in that maybe that's not going to be the dynamic. Maybe one of them does far better over time than the other one. And maybe we need to think of them as two different advertising businesses with two different executions, because they really have two key ways that they track advertising. So, yeah.
Still, overall, you got to love online advertising. Like, out of all the business models out there, online advertising's up there. I mean, seriously. I mean, it's so easy to do. Like, it costs them peanuts to actually display your ads. Yeah. And it's just so profitable.
Yeah. What do you guys think these changes do to CPMs? Like, does CPM on Facebook just go off a cliff because there's less targeted advertising? I know I'd have to look up the numbers on this, but I believe Twitter is quite a bit cheaper to advertise on, but the targeting is just terrible. I don't know if you guys have ever seen an ad on Twitter, but it's often not particularly relevant.
Well, Google's advertising, search advertising, for example, has always been quite a bit more expensive than Facebook, but it's kind of businesses are willing to pay up for it because you're typically capturing a customer closer to the sale. So like someone searching for a product is far closer to the sale than on Facebook, where you're more just kind of giving someone awareness of your product. And like, sure, you might have a link to that product that you just click off Facebook and go straight there, but you're not watching Instagram Reels, for example, or Instagram Stories. When you're doing that, you're not shopping. Whereas when you go on Google and you search for something, you're often shopping. So your Google ads have been a little bit more expensive than Facebook over time, but and that's attracted a lot of people to Facebook ads. It's why they've been so very successful, but it is increasing over time.
The way I see it is that, Google probably has a leg up there, but still Facebook, and I was talking to Divya Narendra, who was talking about this, it's like the advertisers on Snapchat, if you look through those advertisers, they're not, I mean, they're all the big brands like Coca-Cola or something, where it's just like brand awareness. On Facebook's like the place where, sure, you still get a whole heap of that, but you also get more local or close to home businesses because they've got that better targeting, like the better analytics, the better tracking. They can give you the geography of the people you're advertising to. So there's a lot of like small businesses advertising on Facebook because of all those analytics and that targeting. So he was saying like, it is a problem because you don't, if Facebook loses that, sure, they'll still get the big clients, the Coca-Colas or the Subways or whatever that are just everywhere. But it's just like, man, that really crunches down on one of the main useful features of Facebook ads is that smaller businesses can use them to get really close to home with their customers or whatever. But you're right. That's kind of similar to Google, where it's just like plumber, Canberra.
That's exactly what I was going to. That's the exact example I was thinking of. Plumber in my area. You're probably not scrolling Snapchat for that one.
No, exactly right.
Yeah, I think one of the keys will be how are these advertising companies getting the data? Is the user providing the data to them, like geography, for example, or is it coming from a third-party cookie that's tracking you? I think I personally see Google in a better light because people provide almost all of the data to Google that they use to advertise in front of them, at least for their search, right? Search is primarily just what is the search term? Let's give you some things, whereas Facebook is using things like geography, age, and interests, but it's also using other things like spending behavior, credit card usage online, which websites you've gone to, which apps you're using, a lot of different things, which they might not have access to if there's like a simple switch where people can opt out of tracking across websites. And that's, I think, where the concern is. But I don't know. I think if I'd give a conclusion, it's gone into the too hard basket for me. It's not necessarily that I think Facebook's a bad business. I just have more uncertainty about it. Okay. Maybe I'm pulling a Bill Ackman here and saying it's true. What is it? The future certainty of the future cash flows. It's no longer whatever he said.
Whatever he said about
operating leverage.
All right, very interesting. What happened to the stock?
The stock was up 18%, which, I mean, look, that's pretty funny.
So clearly there was something in there that investors, I guess they beat on numbers.
And
not that
it
really
had
matters.
been absolutely smashed.
That's true. That's true.
It's just a good example. You can never really, I wouldn't say it's an outstanding performance from them. 7% increase is not, in revenue isn't great. And
that's true.
Declining earnings isn't
it's
great.
It's underperformance for their business.
Yeah. But relative to expectations, all of these things go into the randomness of the stock market. So yeah.
Moving on. Australian inflation.
That was clean. Smooth.
Australian. There's not much to talk about here. Australian inflation, 20-year high, 5.1%.
I haven't actually looked at this story yet at all.
No, we don't need to. It's just a number. It's just interesting to compare it because we only get it every quarter or something.
Yeah, it's getting up there. What was the US last month? 8.5%. We're not quite there yet.
Yeah.
We're still sitting back a little bit, but our interest rates haven't moved yet either, I believe. Or did they move a little?
Oh, I don't know.
I'm pretty sure they're still at 0.
I don't know. Yeah.
So
it's kind of weird. I live in Australia. I got no idea what's going on in Australia. I know much more about what's going on in the US.
It's either at 0 or something ridiculous like 0.15. Like we do 1.15 increments sometimes, which is just ridiculous. But yeah, so it's such a tiny amount.
Yeah, New Zealand is actually somewhere in between Australia and the US for inflation. I think we're running in the 6s at the moment.
Okay.
And we just had a 0.5% interest rate increase.
Okay.
Yeah. I couldn't tell you what kind of base that's off, but not much from memory.
Does it get how often does inflation get reported for you guys? Monthly, quarterly, or
I'm
you
not
don't know?
sure.
Not sure. Anyway, but yeah, there's not too much to talk about here. Did you have anything to add there, Hamish?
No, not really.
Okay. Just inflation's going up.
Yeah,
everywhere.
We'll see you next month.
Exactly.
Something a little bit a little bit more interesting. I'm not sure if we have anything else to kind of talk about, but I just had just a couple of sentences on this. We today another news story that came out was the quarterly US GDP fell 1.4%. Which is pretty significant decline actually. Analysts were expecting a 1% increase, so it wasn't even an expected decline. So that's kind of massive. If we dig into the numbers a little bit, consumer spending, which represents about 2/3 of the overall figure, was up 2.7%. So consumer spending is continuing to
that's good,
drive GDP along in a strong way as it's kind of been for a while after the pandemic. But that was offset by a couple of things. A small offset, big for the category, but small overall, was an 8.5% cutback in defense spending. So that had an impact. And then the big impactor was there was a 3.2% trade deficit, which fell, which kind of brought back the overall figure. And I was just reading briefly. I don't know. I don't really care too much about what's going to happen on a quarter by quarter basis with GDP or trying to read into it too much. But one analyst who was writing the article or was quoted in the article expects that net trade will flip the other way over the next couple of quarters. So he was basically saying the US is not going to see a recession. But that's always a fun thing to read. Like, guys, don't worry.
Yeah.
The yield curve inverted. We're not going in a recession. The next quarter's GDP is negative.
I think for my thumbnail and my title, the real news out of this is that the US is only 3 months away from a recession.
No, it's only. Oh yeah, sorry. I was saying 3 quarters. Yeah, 3 months. Yeah,
that's what it is.
90 days.
Yeah, 90 days to the recession. Flashing red lights.
Countdown to disaster. Well, it'll be. I believe it'll be stagflation as well if that did eventuate, because there's massive inflation in the US, and there would be a recession, which is unless I guess the other element of stagflation is high unemployment. So that unemployment at the moment is rock bottom.
It's gone
so
down.
I think that element has to be in there as well, I believe. But crazy.
Any thoughts on US GDP, Tom?
Nothing to add on that one.
We've got our expert commentator here today.
Expert commentator.
What were you saying before
I just
about
live my
Charlie-
life on this macro stuff?
Yeah.
No.
Charlie Munger in the house.
No,
Nothing to add.
I don't have a thing to say about that.
Well,
I mean, I could talk about it, but
Let me-
there would
yeah.
be zero value added, so I won't.
let me ask you this: is the US about to enter a recession? Can you please tell us?
I don't know. Shall we make a
prediction?
Young Investors podcast style prediction?
Wow. All right, let's do it. Okay.
I love listening to them. I'd love to make one.
I'm saying no.
Okay. Is that based off this analyst?
No, it's based on a coin flip. What do you expect? Actually, though, I got no idea if they're going into a recession.
All right. For fun, I'm gonna say that it will decline and there will be a recession, and I will be able to make a YouTube video saying US recession in caps, something.
Yep, get thousands of
We're all
views.
going to die, something like that.
1 out of 10.
Wow.
Yeah.
Are you expecting a V-shaped recovery?
We'll get to that. Okay. All right? We'll make another prediction. One quarter at a time. Jeez, Tom.
Sorry.
What's your prediction then? Please
Well,
go ahead.
I'm going to have to go the other way, and they're probably it's going to be record growth, I think.
Okay.
All right.
Inflation. What's inflation going to do next month?
Well, according to the Fed, it's going to zero, right?
Yeah, that's right.
Because all the inflation's happened already.
Yeah, that's right. Well, was it 2.4% expected for the year, and we're already at over 2%? So
for the
0%
first quarter.
So we got deflation for the rest of the year.
Rates to zero.
Rates to zero. Negative interest rate policy.
You heard
Here
it
we
here
come.
first.
Yeah. This is where you get the hot takes of the internet. There we go. Well, guys, I think that's just about it. That's probably all the time that we have for today because we have got a jet. But we still got a good podcast in, 45 minutes or so. So thanks very much for joining me, gents. And hopefully it was a bit of a whirlwind episode, but hopefully you guys still got something out of it. But we'll probably have much more to talk about next week after the Berkshire Hathaway meeting has happened. But we've still got how many days?
Will we be in Texas for the next one?
Yeah.
Yeah,
I think so.
I think we'll probably do one in between. I don't know. What are we going to do?
Yeah, I guess so.
I
guess we'll be in. Will we be in Texas? I don't know.
I don't
7
know.
days.
We'll
days from
figure
now?
it out.
We'll figure it out. Who knows?
Subscribe. Just see what comes out.
You're doing all the plugs for us. I love
Who
it.
knows? We could do another one tomorrow. Who knows?
Yeah, I guess if we got something to talk about, we'll talk about it.
Yeah.
But no, definitely stay tuned. We'll come at you from Texas. We'll have our cowboy hats on. We'll have our big cowboy boots with spurs and coming to you from horseback. That'd be interesting. But anyway, we'll tune out for now. Thanks very much for listening, guys. And we'll see you guys next week.
See you guys.
See ya.